Good morning, everybody. It's 10:49 a.m. Pacific Standard Time. Today's date is 4/6 of 2013. One of the things that we're taking the time to do today with our worldwide trader network around the world and people in the U.S. is to simply update you on this bull run that we've gone parabolically up. We've already updated yesterday's jobs report. One of the things that I want people to understand clearly is that we're going to go into a major catalyst. What is that catalyst? What is this major thing that I'm about to tell you? It's called quarterly earnings. On the beginning day, starting Monday, we're going to start the quarterly earnings. We're going to start it off like we always do with Alcoa. Then we'll have Family Dollar. We'll have some of the names that a lot of people know in here. We'll have Bed Bath and Beyond. We made a lot of money on that particular trade over the last couple of quarters when they missed their reports. J.P. Morgan. We all know who they are. They're going to be coming out with their earnings. What I will caution the normal public is the following. If you've been involved, you've had a great run. What I'm telling you is that the jobs report numbers came in at 88,000 versus 268,000. There is a big disconnect with the labor market being at 1979 lows. That is the general labor force within the U.S. structure. What I will tell people is that during this quarterly earnings, stock prices are at record highs. And that when they report, one of the examples that we gave was the Red Hat trade. I mean, not Red Hat, but it was the FFIV. Red Hat was last month, but FFIV gave a warning and the stock plunged. So what I'm going to do is let everyone know, as I do the indexes, we're going to start the quarterly earnings report. There's going to be a lot of volatility. Now, let's go over here to where the S&P hit our target when we got up to the 15. So let's pull this up to the high of the day and the calendar date. On 4/1 of 2003, we had a high here of 1570.57. Then we hit the highs, the maximum high. We said 1571. We hit 1573. We dropped down on Friday's job numbers. The S&P opened down big. And here was the range on the S&P 500. The range on the S&P 500 was the following. And here's what's important for our trader network. The bull is still very much in play. Just like bears, they both have a mindset and they both have a thinking pattern. This particular bull run from January, February, and through the calendar month of March up until here, we came down and hit an intraday low of 1539 right here. As I said on Friday morning on 4/5 that they would come in and buy the dip. That's what they've done. Every rally that we've had and every little minor pullback that we had right to our support levels, and each one of these lines right here mathematically are $7.58, and it's called a half a delta movement. Just to show how accurate we are, you can see how accurate we are as far as those support levels. They bought the dip here and made the high. So far for the bull, that's worked every single time. But now what I am telling the public is that the price volatility is going to increase. It always does at market tops. It always does at bull runs. It always does at bear bottoms. If I go back over here, when we were down here at this bottom in the S&P, this is back on 11/16 of 2012, and we called that bottom. We started to rally up, and we rallied up to all-time highs in the S&P 500, and it was a great bull run. And we got to the top, And the major catalyst is the following, that this reversal, the bull is going to try to continue to buy the dips. What I am going to tell all of my traders is the following. We will pick off each individual stock, and during the quarterly earnings season, stocks that trade in the S&P 500 index, that means the leadership stocks, the stocks that gap down or they don't make the report, the bulls that never got in this rally remain on the sideline. So in phase one of a market pullback or a market correction, they will buy the dip in these quarterly earnings. What I will tell you, it will become an individual stock market a pick. You pick your good quality stocks. When they come down, they're going to continue to buy. What I'm going to tell people, the headwind for the public, people that own IRAs or 401ks, hey, listen, you've had a great run. You got back up toward the highs where the financial crisis started back in 2007, 2008 period. We've had a great rally. It all started right here when we called the bottom. And we've gone parabolically up. Every dip was bought, like we said. We had minor pullbacks and dips were bought and they made higher highs. They pulled back and they made higher highs. What I will tell everyone, once the S&P closes below this particular support line, let's just call this 1536 in our market maker platform. This is where these two diamonds are. When the diamonds are ascending to the top, that means mathematically we're going up. But every dip, you can see where they come right back and they buy, and they buy, and they buy. And they bought on Friday. So there is going to be a lot of fear that's going to be in these markets moving in this quarterly earnings. Not every company is going to miss, but there's going to be a lot of problems. And I'm just going to give you another snapshot of what we'll be looking for. I'm going to go to the second week to April 15th through the 19th. We're going to start getting some major companies. Citigroup will be coming out. We'll be looking at what Charles Schwab has to say. Just remember that the public investors and the older day trading community has been left out of the rally. You're not the only one. A lot of people are sitting on the sideline. Fund managers have got to put money to work. They missed the rally last year. We'll be looking at Johnson & Johnson. We'll be looking at what USB has to say, US Bank Corp has to say, Northern Trust. We'll be looking at a lot of the financials. Goldman Sachs will be up. We'll be taking a look at what CSX has to say. Again, Intel, we already know the story there. So some of the semiconductors, all eyes are going to be on Yahoo, the new lady that took over there. She's done well with the earnings, but let me just tell everyone, we're going into a major quarterly earnings at record high prices in a lot of these names. One of the bigger highlights that we'll be doing in these earnings, and this also applies with the Dow and the NASDAQ 100 and the NASDAQ Composite. One of the things that we'll be looking at very carefully is what some of these other companies have to say, like American Express, MasterCard, and Visa. eBay, we like eBay, does have a growth story in the PayPal. We would always buy dips on that. The other one, Kinden Morgan Partners, KMP, we'll be watching it carefully. SanDisk, we'll be watching carefully. The other ones that we're going to be watching carefully, and we're going to be buying certain ones on dips. Hey, FCX, well, listen, that thing has got to go lower. But let's just get into where some of these other earnings start to come in play here. Google will report earnings on April 18th. Google has pulled back. We made a lot of money on Google going up. And all last week we made money on Google going down, and the week before we bought put options when Google was going down and we made a boatload of money. We're going to have all eyes on Big Blue, IBM, Intuitive Surgical. Everyone in the trader network worldwide knows how much money we made on that. It fell $84 intraday. Then it bounced off the bottom. So they both went up, but they went down. But we made money on both sides of the market. All eyes will be on Intuitive Surgical. There are some problems. The FDA is looking at the safety features of the Da Vinci units that they use in certain medical procedures. So these are going to be the big ones. Google, IBM, ISRG. Some of the other ones, we'll be taking a look at them. The thing that I really want to point out here is what SunTrust Banks is going to have to say. That's going to be very important. Under Armour, UA. In the retail sector, semiconductors, internet stocks, computer technology, all the various different sectors. This will be the second week. One of the things that I will tell people, though, all eyes are going to be on Goldman Sachs. And all eyes are going to be looking at Goldman Sachs and JP Morgan, because in the financials have been doing good. You need the financials and the housing market, and you need, well, what's the other thing you need? Outside of that is you need the backbone in the technology sector to be able to grow its top line and its bottom line. Goldman Sachs is going to be a major report coming out. They've done well in the last quarter, in the January quarter. It made record highs along with the broader market. Any big drop in after hours, we will buy the dips in the good quality, because the money that sits on the sideline, who has not been involved in the rally, will come in and buy the dips on the good quality stocks. This is the first couple of weeks, and Citigroup, they're going to have a whole lot to say. Headlines are going to be out every which way, everyone. And another big one is BlackRock, BLK. And their consensus is $3.53 a share. A year ago, they were at $3.16 a share. But here, let me tell you something. The growth that we have in the U.S. is not what it's cracked out to be. Everybody thinks that we're going to be at 3.5% potentially. We don't see that right now because of the sequester and what's going on in Capitol Hill. What I will tell all of my traders, most are flat. Most have taken these stocks all the way to highs. We got all the live trades on our website on stockmarketfunding.com with the entries and the exits, both long and short on the equity and call options and put options. What I will say is it's time to be cautious. The market still remains overbought. Like any great bull run, they have a tendency to buy every dip, but you see, the market's not on sale up here. This particular low that happened over here, when we called this correction, we said that we were in a market top back on 219 and that we would have a pullback, and we sure got it. The high here on the S&P at that time was 1530, and we said that we were going down to 1487. Well, we hit the low right here at exactly on this particular date. We hit these lows right down here at 1488. That was the low there, okay? 1494 is what they say, and our price was like 1488, 1485. We had a couple of different price targets, but from that one pullback, that same bull money came right back in, and you can see where the diamonds are ascending. Every dip that tested the half bar here was exactly 1507.48. They came in and they bought the dips. Now that we have taken this part, they came in and they bought the dip again on Friday. But I can tell you right now, price volatility is going to increase during this earnings report. We see the back end of the year, when we get toward the closing part of 2013, that's when we're going to have more growth. We think that in the near term, everyone, that everything is priced to perfection. And when you go into a quarterly earnings report, we had some bad economic data, the ISM number, some of the numbers worldwide out of Germany, some of the things that were happening in Japan, some of the things that have been happening in the UK and London, some of the fiscal cliffs that are outside of the USA is it safe for foreign investors to come in? We have the Cyprus deal, but is it safer for the foreign investors to buy the US markets versus international markets? Once again, we clearly said when we had this big gap down on that they would come in and they would buy that, and you can see here how accurate that is. This red line is a 20-day moving average, and this blue line is a 10-day simple moving average. Okay, so the 10-day simple moving average is up here at 1560. That's the blue line, and the 20-day is the red line. So they bought the dip right over here where they bought this last pullback and made the higher high. However, I can tell you right now that the bull is still there. The problem that we're having is that are people willing to look at a very weak labor market and the Obama health care and lots of other things that have happened. There are too many things that do not add up. And a lot of people get brainwashed into it, but you never want to fight the tape. So the S&P had a range of 25 on Friday. The range on the S&P was $15.16. That was the range on the S&P. So they bought the dip. I am saying that when the S&P comes down, once it closes below, or we gap down on Monday, if we close below 1540, a lot of people are going to start to sell. Because 1540 for the institutions is a major support level on the S&P. I will do the Dow in a separate video. I just wanted to cover the major earnings reports that we're starting. And I can tell you one thing. Bulls get ahead of themselves. Bears get ahead of themselves. Both the bull and the bear community people both have behavior patterns and things they do with markets. Bears get very pessimistic, over pessimistic at the bottoms. Bulls get overly exuberant. I can tell everyone else, and I'm going to show this very quickly. One of the things that I would like to show people is that the fear indicator, which is the VIX, called the Volatility Index, it runs opposite of the S&P 500. When we went straight up here, and then that was that bottom, that went straight up. It made the high. When that made the bottom, this came right back down. What I will tell people, we featured this last week. This is a daily chart on the VIX. And so when this goes up, stocks go down. When the VIX goes down, this means that there is no fear. And when that, so let's take the high of this last reading. Let's go over here to the date. We made this high back over here on 225, and the high on the fear indicator was 19.27. When we got up here on the very same date, let's go back over here. We were putting bottoms in here on this date. When we rallied up to make those highs, when this goes down, when the fear indicator goes down, stocks go up. No matter what, they go up. When the fear indicator goes higher, stocks go down. So, back over here when we were having corrections, you can clearly see that every time on the S&P, back over here on these lows, this was the high right here. The fear was at high levels, but when the fear indicator went all the way down to the bottoms here in this chart, that's when we started this big rally on the year right here. As this went straight up, the fear indicator went straight down. They run invert of each other, and it's a good indicator to let you know that that this is at all-time lows. That means there's a lot of complacency. When people aren't fearful of the market, everybody thinks everything is great. Then you get these great big moves up in the fear. As the fear goes higher, we are making a bottom here, a major bottom on a daily chart. And this is the bottom that we're putting in. We're consolidating down here. This is the volatility of the fear. We made a higher high from the last point. And we made the great pullback here in the S&P from these highs right here. And we hit that on Friday, and they came in and they bought it. Moving forward, we're going to see how this consolidation sets up. When this makes another high, you're going to make lower lows over here. And I can tell you, when you're at all-time lows in the fear indicator on the volatility index, that means that people don't have any concern about markets. It's complacency. It means, in my view, that people aren't looking at what the real fundamentals of our economy is. And it shows that the majority of the crowd believes that no matter what happens, how bad the news is, they rush in and they buy stocks. So moving forward during the earnings season, the reason why this video is longer and we're using this is it's the S&P 500. So here is the daily fear indicator that people need to watch. The higher we go here, that means that more people will be selling, and the lower that we go here in the S&P 500. Now, when we correct down here to the 1515 area, to the 1507 where the real breakout happened here to get to the all-time highs, we would look to be buying the dips. But remember, every bull run has to have a correction. And people need to know what to sell, when to sell, and why to sell. Now, having said that, this is a much longer video than we would normally do, but we're not here. We're here to please our worldwide trader network and people from around the world that are with SMF and the people in the U.S. so that they can get geared up, get ready again, and I will do the Dow Jones. We'll keep that very small compared to the S&P. The S&P is where a lot of people have been buying the dips. They've been buying them in the small cap. So I am going to caution the normal investor, be aware and watch yourself.